The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Welcome, friends. Happy Friday, TGIF. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. You can catch my show daily on TFNN from 3 to 4 Eastern. It is available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Very simple. Just plug those earbuds in, open your smartphone browser, and type in this, tfnn.mobi. You can listen to the stream that way. If you want to look at charts live right along with me, you can use Tiger TV to do that. Two ways to watch Tiger TV. First, at tfnn.com. The show is streaming right on your phone. All right, let's take a look at the NASDAQ Composite. Kind of a rough day for the market. Late last night, John Boehner's Plan B, he wanted to send it to a vote in the House and then realized that there weren't enough votes, and the market took that to be a bad sign. I was driving back from Ventura, California last night and stopped at the gas station, looked at futures on my phone, and boy, I saw a really nasty sell-off taking place in after-hours futures. Market wasn't happy about that. Right now, the NASDAQ Composite is down close to 40 points. What is it now? Down 37.5 points, 1.2% decline to 3,012. Still holding above that 3,000 level. Volume very heavy today. It is the third Friday of the month. It's either triple witching or quadruple. I think it's quadruple witching today. So it's the simultaneous expiration of stock options, futures options, index options, all these things. So always causes heightened volume in the market. Very heavy volume on the NASDAQ. It has lightened up as the day has progressed. We're only about, say, 30% higher than what we saw on Thursday. 1.65 billion shares traded hands Thursday, so 35% higher today. That's going to probably put us in better than 2 billion shares today on the NASDAQ. Very, very heavy volume on the New York Stock Exchange. Let's check in on the S&P 500 here. It is down a little more than 15 points, 1.1% decline to 1428. Trading near its session low here, but still holding above that 50-day moving average at 1413. Volume yesterday on the New York Stock Exchange, 680 million shares, pretty much average. Volume right now is tracking double that on the New York Stock Exchange, so we could easily see 1.5 billion shares on the New York Stock Exchange today. So excuse me, we'll most likely call this a distribution day, meaningful higher volume decline for the major averages, but I still don't think it's, I'm not ready to throw in the towel here. I'm still long a few names in my Ultimate Growth Stocks model portfolio, and I am short one name. But in terms of my long positions, all of the stocks I hold are continue to hold above buy points. That is a positive sign. Even if they go below the buy point, it doesn't make me panic when you're in a market environment that's kind of wishy-washy. I mean, we still are in an uptrend here, and one day of weakness like today that's skewed a little bit by options expiration is not enough to make me run for the exits here. So we want to give our long positions time to work here. At the same time, we don't want to we don't want to let profits slip away. We also don't want to let small losses potentially get bigger. So there may be a time in coming days or weeks where we're going to need to think about protecting capital here if indices continue to bleed here. But let's see how the market trades next week. It's going to be an abbreviated week of trading. We've got Christmas Day on Tuesday, and so today's action is discouraging, but still headed into today, there was a lot of good action going on in the market. So we've been talking about this week the market dishing up some technical breakouts, good to see, and some high quality names, Oracle, Amazon, Rackspace, a lot of Salesforce.com, a lot of stocks out there acting well that have the potential to continue to do well. But so we'll see. We'll see what the future holds here. I don't think it's too early for me to start thinking about raising cash and getting out of the market's way here. This is a market that could easily bounce back from a day of weakness like today. So let's see how things play out here, and don't make too many quick decisions. So that's a look at the NASDAQ, the S&P 500. Let's take a look at the Dow Jones Industrial Average. Well, that too is under pressure, trading near its session low, but also holding above its 50-day moving average, which is at 13,090. The Dow right now trading at 13,161. So it's about 70 points above its 50-day moving average. At this point, the Dow is down 1.2% on the day. Money going into bonds today, not surprising. Money into bonds out of stocks. That has caused the 10-year note to trade slightly lower, 1.76%. The 30-year bond also lower at 2.93%. U.S. dollar index stronger, up 34 ticks today, 0.4% gain to 79.60. February gold up $14.20, almost a 1% gain for gold today. Settles at $1,660.10 an ounce for the week. Gold lost 2.2%. See, with that GLD, we were thinking there was a chance it might be able to hold on to its 200-day simple moving average, but it gapped below the 200-day line yesterday in heavy volume. On Wednesday, it also suffered a big percentage decline in higher volume. Excuse me, I think that was Tuesday. It was down big in higher volume. Lower volume decline on Wednesday, gap below the 200-day line yesterday, and then a little bit of a rally back today. The GLD is up 69 cents, 0.4% gain to 160.42, but still underneath that 200-day line at 161.22. Gold, to me, looks like it might be ready to, sort of sluggish price performance, shall we say. The other situation that could happen in gold here is when you look at this technical structure, as I'm looking at it here, you saw a pullback from October till November, a rally back where it hit a high of 170, and then it pulled back. Now, notice how this low undercut the low set here back in early November. What you could ultimately have here is a double bottom pattern take shape, and if that were to happen, then you'd expect to see the GLD start to rally again. But it's going to have to get back over that 200-day moving average for any sort of new uptrend to begin here. So hard to say where gold is going to go from here, but we'll keep an eye on that, of course. Okay, daily shenanigans going on Capitol Hill. We mentioned that Boehner's Plan B thought he might be able to have enough votes to get through the House. Now there's talk that there's kind of bickering between Republicans here. I'm not sure what Boehner had to gain by submitting this plan to a Republican-controlled House, and he didn't have enough votes. I mean, that has to be looked at as a defeat for Boehner. But anyway, today, Senate Republican leader Mitch McConnell said the Senate should pass a one-year extension of current tax rates. Senate Majority Leader Harry Reid scoffed at that idea and said Boehner should allow a House vote extending current income tax rates only for the middle class. So now Reid and McConnell are going back and forth. Before it was just Boehner and Obama who are going back and forth. So it's just a lot of blah, blah, blah going on in Capitol Hill, and I think it's time to get a deal done here. Hopefully it will happen soon, although it is not looking likely at this point and before the end of the year, and I think that's why you're seeing the market act the way it is. Flurry of economic data earlier today. The Commerce Department said durable goods orders increased 0.7% in November, better than the consensus estimate for an increase of 0.2%. October's reading was revised higher to 1.1% growth, compared to an initial report of 0.5% growth. Excluding transportation, orders rose an impressive 1.6%. That was much higher than the consensus estimate of 0.2% growth. So solid numbers from the durable goods reports today. The Commerce Department also said that personal income climbed 0.6% in November, largest gain since February. And consumer spending rose 0.4%. Michigan sentiment in December. This is the final reading on consumer confidence for the month of December. Came in at 72.9, slightly below expectations and well below November's reading of 82.7. That consumer confidence level at the end of November for the University of Michigan was very, very high, so we're about 10 points below that November reading now at 72.9. All right, let's take a look at some headline stocks today. Yum Brands. Boy, does this one look nasty. Look poised to extend losses for a fourth straight session. This was a $70 stock on Tuesday. $70 stock on Tuesday. It is now $63.81, down 4% today. News here is that food safety authorities in Shanghai are investigating Yum's KFC operations. Of course, Yum not only has KFC, they also have Taco Bell and Pizza Hut, with significant exposure to China, so the stock is getting hit as a result. Really looking like a laggard stock here. Some people are going to say it's on sale, but a lot of big sellers in this stock lately. Looks kind of risky to me. Merger and acquisition activity, more of it. Boy, a lot of deals happening as the year winds down here. Pinnacle Entertainment. Big day for Pinnacle Entertainment. This is PNK on the New York Stock Exchange, up 20% to 1604. News here is that it plans to buy Ameristar Casinos, ASCA, for $869 million. Pinnacle has 7 casinos in Louisiana, Missouri, and Indiana. Also operates a racetrack in Ohio. Both companies are on track for $1.5 billion in revenue in 2012. We'll take a look at Ameristar Casinos when we come back. Ken Shreve with you on Breakout Investing. Stick with me, folks. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Before we went to break, we were talking about Pinnacle Entertainment buying Ameristar Casinos for $869 billion. Pinnacle, the acquiring company, up nicely on the day. So is Ameristar, ASCA. Here's a look at a chart of Ameristar. You can see it was showing relative price strength ahead of this acquisition news today. Shares up about 19.5% to 26.36. So a lot of deal flow happening as the year winds down. Not uncommon, actually. Taking a look at some earnings reports. Boy, a lot of optimism around Research in Motion ahead of earnings. Look at the hit the stock is taking today. Unbelievable. I mean, it was a tremendous move for RIM since early November, and even yesterday, just ahead of the earnings, it was still holding near highs, trading around 14. Stock is down 21% today to $11.15. And news here, stock initially traded higher in after-hours trading last night. The loss was smaller than expected. They lost 22 cents a share. Analysts were expecting a loss of 35 cents. Sales came in better than expected as well, down 47% from a year ago to $2.73 billion, but analysts were looking for $2.65 billion, so better than expected sales. The decision to scrap service fees for some users spooked investors. Service revenue now makes up about 1/3 of revenue at Research in Motion. In the latest quarter, RIM shipped 6.9 million BlackBerry smartphones. That was mostly in line with estimates, but down 50% from a year ago. It shipped 255,000 BlackBerry Playbook tablet computers. Remember the Playbook? Remember all the hugabaloo about the Playbook? Just not a big player in the tablet market. Not too many people are outside of, Samsung and Amazon and Apple, of course. This Playbook is not going to make much inroads in the tablet market. Anyway, they did about 255,000 units in the latest quarter. That was up more than double, or close to double, what they did in the prior quarter. They did 130,000 in the 3-month ago period. So overall, rough day of trading for shares of Research in Motion. Nike, at last check, was having a standout day. Let's see what Nike is up to. Oh yeah, big gap up. Beautiful breakout here, actually, over $100 a share. You can see the stock had been facing some resistance at its 200-day moving average for about 3 weeks. It was a little ceiling for the stock, but when you get volume of 5.4 million shares, that's what it's traded in the with about a half hour left to go in Friday's session. There's a good buying demand for the stock today, up 6.4% to 105.38. Again, just a good bullish technical breakout over $100 for Nike. Earnings were up 11% to $1.14, nicely above estimates. Sales up 7% to $5.95 billion. That was a little bit below, but investors were encouraged by a strong performance in North America. Sales up 17% in North America. Strong demand for running shoes, but sales in China down 11% to $577 million. Nike's having some problems with apparel there. So they're going to kind of reshift their strategy. Apparently the Chinese people like tighter fitting clothing, so Nike is going to see what they can do in that regard. But a very bullish day for shares of Nike after a pretty decent earnings report. Red Hat also having a good day today. Red Hat had been lagging the market, but similar to Nike, it has a nice gap up above its 200-day moving average today, up 4.4% to 54.93. Red Hat is a distributor of Linux operating software, has just been a steady grower for as long as I can remember. Not too many missteps for this company. Earnings growth has slowed in recent quarters, only up 4% this time around to 29 cents a share. That was in line. Good top line growth, up 18% to $343.6 million. That was about, maybe 5 million. 5-6 million better than expectations. Subscription revenue still makes up the bulk of revenue at Red Hat. That was up 19% to $294.2 million. Company also announced a small acquisition, very small, $104 million. It's paying for cloud software company Manage IQ. So good day of trading for Red Hat as well. All right, taking a look at some movers today. Not too much green, I should say, in my screens, but look at Air Methods, looking to make it 5 in a row here, up 1.7% to 115.80. This is a company that provides emergency air transport services. Recently announced a 3-for-1 stock split and a special dividend of $7 a share. So Air Methods, one of the few stocks trading higher today. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direxion Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direxion Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Folks, don't forget about Ultimate Growth Stocks, my newsletter at TFNN. You can get 30 days absolutely free. That is about how much time it'll take you to just kind of get familiar with how I approach the market. There are some times when I am aggressively invested in the market, looking for buying opportunities. There are other times where I'm kind of pulling the reins back and not active, but still providing a lot of market insight. It is still it is a long short portfolio, so there are times when I'll have long positions, or there are times, I should say, where I will be favoring more long positions than short positions. There are other times where I may be more short than long, depending on the messages, the signals that the market is giving me. What I know right now is that the market uptrend is still intact. There are yellow flags out there. There's no doubt about about it. Today is a yellow flag, but indices are still holding above support, and like I mentioned earlier in the program, stocks in the model portfolio are all holding above buy points. And even if they fall 1, 2, 3% below a buy point, I'm not going to be too quick on the trigger. I own stocks I think have great potential in 2013 to be big leaders, so you want to give these names as much room as possible to work. So I'm discouraged by today's price action, like a lot of other people are. But you know what? I'm kind of looking at the markets here, and we are rallying a little bit into the close, not by much. But I see the Dow now down about 116 points, 13,195. The Nasdaq is off its lows. It's down 32 points, a little more than 1% to 3,018, and the S&P 500 down a little more than 12 points to 14,031. So again, if you want to check out 30 days free of Ultimate Growth Stocks, the way you do that on the homepage of TFNN.com, right along the top of the homepage, click the Newsletters tab, and then after that, click on Investment Newsletters, and you can sign up for 30 days free of my letter. I think it's going to be a great 2013 filled with plenty of profit opportunities. And again, this recent uptrend that was confirmed one day after Thanksgiving. Yeah, it was a half day of trading, but we did get a mild buy signal from the market. And, up until today, it had been working pretty nicely. We actually had go back to the NASDAQ composite here for those of you watching in Tiger TV, and we had a nice little mini breakout for the tech index earlier this week on Tuesday. There was some juice behind that move. So, and then, look, you see the NASDAQ here trading up near its high, pretty much at its high of the day, still down about 1%, but it is showing some resilience today. Again, volume in the market very heavy today due to options expiration, so it'll probably characterize it as a distribution day with an asterisk. Volume on the NASDAQ right now tracking about 30% higher than what we saw on Thursday, which is 1.65 billion. That tells me that we're going to be pretty close to 2 billion, probably a little higher than 2 billion shares today on the NASDAQ. Volume on the New York Stock Exchange tracking a little more than double what we saw on Thursday, which was 680 million. So we could come in, I'll say 1.4, 1.5, 1.6 billion on the New York Stock Exchange. So, somewhat compelling price action for the major averages today. The fact that they've rallied well off their lows. At least the NASDAQ has, trading up near its session high. S&P 500 has also moved off its lows, as you can see here, trying to get back to the middle half of its trading range today. And the Dow Jones, similar situation to the S&P 500 here, still holding above support, trading slightly in the bottom half of its range today. NASDAQ, the most impressive, though, has fought all the way back. Still down, but trading near its high for the day. All right, let's take a look at some other stocks out here acting well, showing resilience. Watson Pharmaceuticals, WPI. This is still holding near highs here. This is a generic drug maker. Really solid growth prospects at Watson Pharmaceuticals. You can see it's in the early stages of trying to break out of a base here. Not a stock that is under meaningful accumulation. Typically, when you see a stock trying to break out from a consolidation of this length, it's good to see some volume behind the move. Not really seeing it yet. Some decent volume today. I'll give the stock credit. So definitely some accumulation going on in Watson Pharmaceuticals today, but not really making much progress. The swing point here is $90 a share. It is 91.06. So certainly not extended in price yet. Full year profit at Watson this year, 2012, expected to be up 24% from 2011, and then next year 39% annual earnings growth. So this is a company that continues to deliver the goods on the bottom line and top line. So Watson Pharmaceuticals looking good. Oracle, strong earnings from Oracle earlier this week. It fueled a beautiful technical breakout for the stock. Sellers were in Oracle earlier today, hit an intraday low of 33.20, but it is up at 33.81, like the NASDAQ near its session high. Still only down about 0.4%, 13-cent loss to 33.81. So Oracle has not filled its gap yet. It probably will at some point, but Oracle showing relative strength today. Also, Comcast, another name on my radar here, showing relative price strength. Comcast under a little bit of pressure here, but still respecting its 50-day moving average, still holding above that key support level. It is down 83 cents today, 2.2% decline to 37.26. So Comcast. Yeah, and heavy volume in Comcast today too. So we'll see if it can hold on to its 50-day moving average here. And then tech services provider Cognizant, CTSH. This is a big company, market cap of $22 billion. Similar situation here. 2 days in a row where it fell below $72 a share. It closed near its high yesterday, back up near its high today. It's actually up 17 cents to 73.89. So Cognizant, another stock showing relative price strength today. Cognizant, another steady grower out there, should be able to grow annual earnings by about 15% this year and next year. Again, they're a provider of IT consulting, technology outsourcing services, but a good, solid, large cap name. Also keeping an eye on Biogen IDEC here. A lot of stocks on the watch list. This is again what I've been saying. I'm not ready to give up on this uptrend yet because still seeing some setups out there that could work in time. I'm talking just in a week or two we could see some of these bases deliver technical breakouts. Biogen to me looks like it's just forming on a handle area here. The issue with Biogen is that volume is pretty heavy today. It was also pretty heavy on Wednesday, and typically when a stock drifts lower, Biogen rallied from mid-November from $136 a share all the way up to $154. Now it's pulling back, which is what you want to see ahead of a breakout, but you really want to see volume real super quiet. You don't want to see little signs of big sellers in the stock, and you're seeing it today, and you saw it on Wednesday as well. Biogen should get a ruling on its oral MS treatment BG12 by the end of the first quarter next year. This, if approved, would likely be a big revenue driver for Biogen. So this is one that still has potential. Not great action today and not great action Wednesday either, but still a name to watch here for a possible breakout. And then another strong performing healthcare stock out there, Amgen, AMGN. This is big company, market cap of $67 billion. Amgen flirting with a break below its 50-day moving average. It did this in November, but it quickly recovered the line. So we'll see if Amgen can hold its 50-day moving average here. Stock is down 1.3% today to 87.25. You can see three out of the four past trading sessions above average volume decline. So there are signs that some mild signs, I would call it mild signs of institutional selling recently in Amgen. Sometimes that just means a stock is going to start to base and consolidate gains. It certainly doesn't mean it's about to fall apart. And Amgen, I consider an institutional quality biotech stock, and we'll see what the future holds here. But right now, trying to hold on to its 50-day moving average. Some growth names under pressure. Mentioned CF Industries yesterday. See what this stock is doing today. A big break below the 50-day moving average last week. It is still trading below that line, down another 1.8% today to $200.66. Looks to me, you can see the 200-day moving average here. CF Industries found support in November, so this looks to be a long-term support level. But some subtle signs of institutional selling in this stock as well. Not overwhelming, but big investors have been in there selling for a few weeks now. Be interesting to see if it's going to be able to hold this longer-term support level, the 200-day moving average. That is at $195 a share. CF Industries, again, last trading around $200 a share. Shares of Panera Bread also getting hit hard today. This is also a questionable technical setup here. This is, to me, looks like a stock that is running out of gas here. Another example of how buying demand can really dry up in a stock. Panera has been in a consolidation since October. You can see here, if you're watching in Tiger TV, here was the start of the consolidation, a series of lower highs. Tries to rally back this week, and didn't see any news on Panera, but volume is pretty heavy today, down 4.5% to 158.85. You can see this is another example. Will this 200-day moving average be a support level or not? What I know today is that there are some big sellers in the stock, and that is, again, just something to pay attention to. I always say that as an individual investor, if you're holding a stock and you start to see signs that institutions are dumping, it's usually a good idea to get out of the way. Either lock in a profit. If you're break even, maybe you can give it a little more room, but just be sure not to let a small loss become unmanageable. That's a common pitfall of many investors out there, and that's something I adhere to very much for ultimate growth stocks. I mean, there are times, when you just have to cut a loss. You have to keep a loss small, cutting losses 3, 4, 5% below your purchase price, and with that kind of strategy, you'll always live to see another day. I think that the maximum drawdown in my model portfolio has only been 4 or 5% or something like that, but that's just because I keep my stocks on a tight leash. I'm not afraid to take profits when I get them, but I also want to give my winners enough room to run. The trick in recent months has just been a volatile market that's been it's been easy to get shaken out, and quicker, or the holding periods have been much shorter than I prefer. But when you're in the early stages of a bull market, that is the time when you can typically hold stocks and give them some time to room. The issue here is that we're in kind of like this tail end of a bull market. I think it still could work, but remember, the bull market started in March 2009. We've had some pretty serious pullbacks since between March 2009 and now, but we are kind of in the later stages of a run here. Doesn't mean that this recent rally can't work, but something to pay attention to. So Panera Bread definitely looking vulnerable here. Other names that look interesting to me in retail, I think 2013 could be an outstanding year for Urban Outfitters. This is a name that I'm watching closely. It's down 2.5% today to 39.42, but you can see this is an example of a stock that's just built the right side of a base. Maybe you get a little handle area forms here. It comes down to $38, $39 a share in light volume. That could eventually pave the way for a nice, powerful breakout over $40. So this is a breakout candidate, good turnaround story, sales growth accelerating in recent quarters. In fact, my wife was just in Urban Outfitters earlier this week. She said, I stopped going to the store because, they were kind of out of touch, and, she was back in there today, and she couldn't believe the product assortment that they had, and was very, very impressed. And it actually shows in the company's recent results. Again, sales growth starting to accelerate again. It is starting to be, bought again by the institutional investors out there. So in specialty retailer, Urban Outfitters has a good amount of potential. So definitely one to watch in 2013. Stratasys showing nice price strength today. Look at Stratasys, hits a low of 76, a high of 79.38. Shares last trading at 79.18. So showing incredible price strength. This is another stock that people are very optimistic for 2013. Could be a good year for the 3D printer maker. It's only down 4 cents today, 79.18, and holding near highs. So this is another one to watch. Good stock that is just acting right, not showing anything at all in the way of sell signals. All right, we're going to head into the final break. When we come back, we're going to do one final check on the markets. I'm going to wish everyone happy holidays, happy New Year, because we are going to be off the air Monday and Tuesday. So we'll do all that when we come back. Ken Shreve with you on Breakout Investing. Stick with me, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the markets here one more time before we put the finishing touches on today's show. Another week of trading. about to come to a close. The Dow Jones right now down close to 132 points, 13,180 on options expiration Friday, which is seeing very elevated volume not only on the New York Stock Exchange but the NASDAQ as well. The NASDAQ Composite down almost 34 points, 1.1% decline to 3,016. S&P 500 down 14 points, 1% decline to 1429. A lot of talk, and rightly so, about the Russell 2000 here, a small cap index showing relative price strength. So this is definitely a feather in the bull cap here. See the Russell 2000 in Tiger TV still holding way above its 50-day moving average here. That's all the way down at 817. So, small caps continue to act pretty well in this market. Another reason to, not entirely give up on things and get too bearish too quickly. You have to remember that going into today, there was plenty more to like about this market than not to like. There were some things not to like, but overall the positives seem to outweigh the negatives, not only in terms of the action in growth stocks that I follow, good breakouts, good setups out there, not much in the way of institutional selling, an uptrend that was looking pretty good. So we get a little bit of a hiccup today. Let's see what things look like next week and as we head into the new year here. But Russell 2000 still acting quite well. It is only down 0.7% today, down a little more than 6 points to 846.28, but trading in a tight range today. So give credit to the small caps. Next week, very, very quiet. I'm not even sure what's going on Monday. If it's a half day of trading, I should know that. I do know that the market will be closed Tuesday, obviously Christmas Day, and then likely very quiet on Wednesday, Thursday, and Friday as well next week. Not much at all in the way of economic data and earnings reports. Probably more economic data than earnings reports next week. It all comes towards the end of the week. Next week we've got the Case-Shiller home prices. We've got weekly jobless claims, new home sales, and pending home sales. Again, that all comes later in the week. Because we've got a lot of housing data coming up next week, let's take a look at that iShares Dow Jones U.S. Home Construction Index Fund. Also showing resilience. There's nothing wrong with this fund technically, still holding comfortably above its 50-day moving average here. Last trading at 2095, down 1.7% on the day, but up near its session high. The 50-day moving average for the ITB is at 2032, so still holding comfortably above that. Home builders, still acting well. The ITB recently staged a technical breakout. There wasn't a whole lot of volume behind the breakout, but by and large, a lot of these home builders continue to look pretty good. I thought they were ready to kind of pull back and consolidate gains, but lo and behold, Ryland Group earlier this week, late last week, stages a technical breakout. That breakout is not showing any signs of trouble. Yeah, it's pulled back a little bit in the past couple days, but I mentioned earlier in the show that a lot of these breakouts, these stocks are still holding above buying areas. And when you start to see breakouts fail miserably, heavy volume declines, rolling over in heavy volume, trading well below the buy points, that's a reason to be concerned. But one higher volume decline for the market here is not going to be enough, like I said, to make me get too bearish. So I hope you all have a great Christmas next Tuesday. Again, I'm going to be off the air Monday and Tuesday, but Merry Christmas to you all, and be safe. Happy New Year, all that good stuff. I'll be back next week with more Breakout Investing. In the meantime, stay tuned for Tom O'Brien, 4 to 6. Have a great day, folks.
Let me tell you.